Okay guys, so in today's video, I wanted to talk about the VWAP bounce day trading strategy. Now, this is a strategy that I've been using for over 5 years now. I have traded thousands of VWAP bounces, and it can ultimately be one of the best and most useful trading strategies for any type of day trader, whether you are day trading, stocks or equities or futures or options even. You can probably use the VWAP bounce day trading strategy in one way or another with all those different niches of trading. And so in today's video, we're going to break down exactly how you use this trading strategy in all the different markets. Plus, we're going to look at where you should set stop loss levels if you're interested in this one, what the different variations of the VWAP bounce day trading strategy are, plus more. And so make sure to stick around to the very end of this video. Before we take a look at that though, if you want to help support our completely free trading content, don't forget to hit the like button, hit the subscribe button below, and don't forget to also hit the notification bell so you can stay alert on what we have going on at the Beginner Trading channel. Now, with all that said and out the way, let's take a look. Okay guys, so the VWAP bounce day trading strategy is incredibly simple. If you don't know what the volume weighted average price is, the VWAP is meant to identify the current trend in the market. And so you can use this to identify the trend, and you really have to let the trend play out first. But if you wait long enough, usually the stock will pick a side and start to maintain a specific trend. In this case, we're trying to capitalize on a upward or bullish trend, and you'll see these type of trends show up pretty regularly in the market. Your job with the VWAP bounce day trading strategy is to wait for pullbacks to this volume weighted average price level. On my charts, I always make it a purple level, and buy that pullback and attack that range from the current trend that is formed. Now, if you want to take a look at the basic VWAP bounce here, you can see you're usually looking for a stock to maintain in an upward direction above the VWAP in this instance. Again, you can see the purple line as the VWAP here. You're looking to attack pullbacks, essentially just attacking that upward trend. You're waiting for it to hold at the volume weighted average price level and then bounce, which is where it gets its name, the VWAP bounce. Pretty simple strategy actually, and volume is incredibly important if you're trying to identify this type of system or strategy. Now, there's a lot of other variations that we can attack with this specific setup. One of my favorite ones is the VWAP Rebound or Reclaim Bounce, and this essentially waits for stocks to test the VWAP. In this example, again, you can see the stock kind of testing this VWAP area here. It keeps attacking it, forming that low range, but it underneath the VWAP, and so it starts to kind of break down underneath the volume weighted average price level. With the Rebound Bounce or the VWAP Reclaim, whatever you want to call it, you look for it to do what the name suggests, which is rebound back over the volume weighted average price. And again, once it does that, once it confirms that range, really, your job is to attack the pullback to the VWAP area, as you can see here, and ultimately attack the range up to the previous highs up there. That's usually what you're doing with the VWAP bounce, is you're attacking a range. And so in this instance, on this specific example, you can see the range has formed. It started to test the bottom of that range, but when it bounces so obviously and so cleanly over the VWAP, you're attacking that second pullback to the VWAP after it confirms the range that you're attacking, if that ultimately makes sense. Now, these are usually meant for more scalping style plays because generic or conventional VWAP bounces are usually a little bit longer term. If we look at this regular basic VWAP bounce here, you can see it's a little bit longer term. We bounced here, we ripped up, and then we're waiting, a solid, at least 20 to 30 minutes to catch it again back here. And so the generic or conventional VWAP bounce is usually a longer term strategy if you're trying to capitalize on a specific market trend. You know the markets if you watch it enough, where you have the SPY or the broader market or the Q or even a specific penny stock that is just maintaining a really obvious trend. These are the best for basic VWAP bounces, because with basic VWAP bounces, you're looking to capitalize on longer term pullbacks. And so again, in this case, you can see a pretty longer term pullback. With the Rebound or Reclaim Bounce, you're essentially trying to capitalize on a little bit shorter time frame pullback here. And so again, you can attack this one, but right after we had this bounce, it started to dip under the VWAP here. Again, we had the reclaim. We're buying on this pullback and then quickly selling on this bounce, which is why it's more meant for scalping. This is a strategy that you'll see me use in the futures market with like the E-mini or the micro E-mini when the market is testing a range, or even something like Forex if you can find a nice enough trend and you have a platform that shows you the volume weighted average price. Now, another really important part of VWAP bounces is looking for a break over the VWAP. You could probably see it with the last example where one of the big confirming things of attacking a VWAP bounce is waiting for the cross over the VWAP here. And so with the VWAP break, you're looking for the stock to push over the VWAP and hold support and continue. If you can target that, it has a pretty high probability. When I've tested this strategy myself, I found that it worked around 75% of the time if you can have an ideal setup. That's not always the case, and of course nothing is guaranteed, but again, if you can find an ideal setup where you have this big break over the VWAP, you have maybe a range confirming, and you start to test the top of the range, it can be very, very profitable, and there's just a lot of different variations of it. When we attack the VWAP pullback here, we're looking for confirmation in a trend. So when we're attacking the VWAP bounce or the VWAP pullback, you want that trend to be confirmed, and sometimes the best way that trend can be confirmed is just looking for a stock to break over VWAP in a really clean way and then hold. That's usually a pretty good sign that you might be able to attack that upward trend after that, and it's one of the signs that I use to identify edge in VWAP bounces when I trade as well. And as I just said, the opening bell can be incredibly risky. It's very random for VWAP location, and a trend has not been formed usually at the opening bell. And so you should definitely avoid trading the first 10 minutes if possible after the open, and use that time to just evaluate where the current trend is. You want to pay attention to abnormalities in volume and then attack pullbacks to the VWAP after high volume breakouts. And the reason you don't want to attack the open is because the pre-market trend doesn't really mean that much relative to the opening bell and afterwards. At the opening bell, so much volume is rushed into the market that you really don't know what the stock is going to do. You don't know who's buying and who's selling, and again, that high volume amount can really influence stocks and change the trends really, really quickly. And so you don't want to bet on a specific trend right after the open. Again, the best thing to do is just kind of calm down, let the stock settle down a little bit, and then try to find out what the current trend is after the opening bell, and then wait for big obvious moves in that direction. If you get a big obvious move in a specific direction and it looks clean and everybody else sees the trend forming, that's a lot more likely to continue in that specific trend than if you have a really choppy open like you can see on these examples where we kind of just chop up and down to the top and bottom of the range. It's going to be a lot harder to figure out where that stock is going, and again, you want to kind of get into a reactionary mindset at the opening bell. You don't want to be dead set on one specific direction, because that's how you have big drawdowns in your account and ultimately lose money. You want to just be able to take it slow, avoid chop like this at the opening bell, let the trend play out, and then that's when you're going to attack a VWAP bounce or a VWAP pullback after you get a really obvious upward trend to attack. Another aspect of VWAP bounces that not a lot of people talk about is the range that comes with a VWAP bounce. Now, you can use highs and lows to identify a range where a pullback to the VWAP seems probable, and a lot of the time you're using double tops and double bottoms. Now, what we mean by this is, if you can look at this example, you can see the top of the range right around here, and the reason we know it's the top of the range is because the stock stopped moving up in this specific example, and it starts to kind of top out. You can see a top here, a top here, a top here. Even if you go all the way over here, you can see tops all around the same area to where if you draw a line right through this, you can kind of see a top of a range here that you can use to take profit or kind of be a profit taking level in your trade. You could also see a bottom range here as well, in between maybe the VWAP and these lows. You can see a double bottom here as well, identifying the bottom of the range. Until where you draw this out, you can see a top and bottom of a range for you to attack in your trading. And so what you're going to try to do with these specific type of setups is you're going to start adding or buying around the bottom of this range, and if the range ultimately breaks down, that's your cue to get out of the trade. You don't have to keep attacking that upward trend, but if you buy it at the bottom of the range and sell it towards the top, it's usually a really good, easy strategy to start learning VWAP bounces. And again, if the double bottom as the bottom range breaks down and the stock breaks underneath it, that's your sign to get out. It's a really easy sign, so it's really easy to follow your trading plan, and you can just kind of attack that range until that range breaks, and then kind of rinse and repeating, attacking that upward trend using VWAP pullbacks and bounces, and it can just be really, really profitable. Another thing that you can do with these type of trading strategies is you can look for confirmation, where you have double confirmation, where the VWAP and another major technical level coincides to right around the same area. And so in this example, you can see we have this here with a half or whole dollar level, which are big psychological levels, and you can use these to get kind of a double confirmation. Not only is this the VWAP here at around 386.50, it's also a half dollar level of 386.50, and traders follow half and whole dollar levels, then especially if they've been confirmed previously like this 386.50 level. When we get the pullback and the VWAP and this major support level that we've identified are coinciding right to the same area, that's going to help your bounce happen a lot easier. And we even get the candle wicks as confirmation here. When we get this big down wick, that is indicative of buying pressure, because in order for this candle to come all the way back down here and then form this wick, it had to get pushed up really quickly. And so what happened here is that the stock pulled back and then bounced so quickly that it formed these big down wicks, and you can see all the upward pressure that comes after that. And so it's really indicative of strength if you can have these levels that coincide to the same spot, where you have like a VWAP or a moving average and a major half or whole dollar level. You can just use those as really obvious bets on a specific trend, and if you can wait for these patiently, they could be really profitable as well. Now, another thing to look for is where are you going to set your stop losses if you're going to attack a VWAP bounce. Now, my favorite place to put these are big sentiment changing levels. And so the trend changes when previous lows are tested. Historical bounce levels can also be used to identify higher highs or higher lows. And my favorite way to use a stop loss here is just use previous bounces. If the stock has bounced previously, i.e. this example here, if the stock has bounced previously, we can use that previous low right here as a risk level. And so when we start to break down underneath that, that's pretty indicative of sentiment changing weakness. And so you can see once this level here where we had this VWAP bounce previously broke down, a lot of traders are just losing confidence in the current upward direction. They're starting to sell, and that might be a pretty good time for you to sell as well, if that makes sense. And so again, just to look at this example as where I might get out, I can use this previous low here where we had this big rip, the big cross over the VWAP as we mentioned previously, and we had the VWAP bounce. Again, that makes it a really nice level to pay attention to. We even had lows that formed right around the same level, and then we got the big breakdown. You can see how big this candle was, so there's a lot of sell orders coming in there once this level broke down. Another low level that you can use is the opening range low, and so in this case this would be this level right here. You can see the opening range low over that maybe 5 to 10 minute open. You have the top here, you have the bottom here. Here's the opening range low, and so when this starts to break down as well, that's definitely a pretty good sign that the trend is changing and the downward trend might start forming. And so again, they're all kind of subtle differences and trend changes where you should just use these levels to identify where the sentiment is changing and where it may be time to actually exit your position. Another thing to talk about is the differences between large caps and penny stocks. If you're trading penny stocks, VWAP bounce strategies are very quick trades. You don't really want to attack a huge trend with penny stocks because frankly, the longer you hold on to penny stocks, the less reliable the direction you're attacking ultimately is. Penny stocks, especially low float stocks, can change very quickly, and so volume is one of the single most important factors if you're going to look to trade and attack penny stock breakouts and breakdowns using the VWAP bounce. Every day will also not have an edge in penny stocks. A lot of the time, the day is just not favorable for trading VWAP bounces in penny stocks because, a lot of penny stocks will just be failing and it just won't be a reliable day. And so you got to find new stocks every day if you're going to trade penny stocks. You have to wait for high volume, really abnormal volume with big breakouts, parabolic curves, and more if you're going to attack penny stocks. And if you don't have patience, you should probably not trade penny stock VWAP bounces because, again, it can get really easy to just kind of bag hold these type of moves. If you don't have patience and actually wait for high volume days and favorable activity in penny stocks, you will lose money. These stocks will turn around on you and it just won't be a reliable day. Still, if you can wait for high volume moves and parabolic curves and just really good volume days with penny stocks, then there can be a ton of opportunity to make money, and it's just one of those things you have to be really patient about. If you're trading large caps and ETFs, you really want to focus on volatility as a whole. Some days will really just be amazing for attacking VWAP bounces, and a lot of the time the reason for that is because the broader market is performing really well and pushing up and holding VWAP really well, and so you do want to watch the broader market if you're going to trade large caps or ETFs, obviously. And volatile markets markets usually can equal edge. You just have to wait for them as well. Some days are just not favorable. They're just really choppy and sideways. And so if you try to attack VWAP bounces, you will lose. And a common overarching theme of trading VWAP bounces is having the patience to wait for favorable days. It's not going to be every day. You really have to see good stuff in the market and build important, realistic rules for yourself to follow in your trading on the good and bad days. And it's something that really takes experience if you want to grow an edge in these type of trading systems.